Yeah. Now, we'll pick up now asset accounting. First, let me complete the theory part. I'll send you the notes. This is also a sub-ledger, what we call subsidiary ledger. What terms we use here? We use the terms like this: chart of depreciation. What is chart of depreciation? All asset accounting customization steps will be made to chart of depreciation. Chart of depreciation will be assigned to company code oblique codes. In the group, 5-6 company codes are there. We can assign the same chart of depreciation to all the company codes. Here we cannot create chart of depreciation. We should copy and create chart of depreciation because each country, the depreciation rules are different. What SAP has done, each country, they've created the chart of depreciation. So what we do, we copy the Indian chart of depreciation. For India, if your company code is in India, we copy Indian chart of depreciation and create. Or we can use directly. The same way, if suppose your company code is in US, you copy US chart of depreciation and create. Because the depreciation rules are different, they have created each country separate chart of depreciation. So now we have created the company code India. So we copy Indian chart of depreciation and create. Next, depreciation areas. Here we have book depreciation areas like this: book depreciation. In India, we have Companies Act depreciation. So now we have to post in the accounts as per Companies Act the depreciation. So posting to accounts will be only book depreciation. So we post to accounts as per Companies Act, that is called book depreciation. Then we have income tax depreciation. Your income tax depreciation rules are different. We have, suppose costing depreciation we want to have separately, we can have. You want to have group depreciation. Your group is in US, they are following different rates, different methods. You can create one more group depreciation. But income tax, costing, group, they are only for reporting purpose. So your postings will be only book depreciation. The other things are only for reporting purpose. Like this, one company can have number of depreciation areas. So one company can have number of depreciation areas. If the rate is different, method of calculation is different, you have to create an area. Next, we have depreciation methods. So we have straight line method, what we call SLM. That means what? Depreciation will be calculated on acquisition value or purchase cost every year. Acquisition value means purchase cost every year. Suppose asset acquisition value or purchase cost is 1 lakh. Rate of depreciation is 10%. SLM is straight line method. So every year we calculate on the purchase cost the same rate. Suppose first year depreciation is 1 lakh into 10%, 10,000. Second year depreciation also 1 lakh into 10%, 10,000. Third year depreciation also 1 lakh into 10%, 10,000. Every year 10% it calculates on the purchase cost. One more, we have written down value depreciation method, what we call WDV. Here depreciation will be calculated on net book value every year. What is this net book value? Suppose your asset purchase cost is 1 lakh. Rate of depreciation is 10% WDV. First year depreciation will be 1 lakh into 10%, 10,000. The net book value in the year ending in the first year end will be how much? 1 lakh minus 10,000, 90,000. Second year depreciation we calculate on 90,000, not on 1 lakh like straight line method. We calculate on 90,000 at 10%, 9,000. Net book value in the second year end will be how much? 1 lakh minus first year depreciation 10,000 minus second year depreciation 9,000. Net value is 81,000. Third year depreciation we calculate on 81,000 at 10%. So that is 8,100. So in this method we calculate depreciation and net book value in the year end. So this is the written down value method. Earlier companies used to follow either straight line method or written down value method, their choice. Now we have in Companies Act, in the new Companies Act 2013 in India, they've given a method called useful life method. Now companies, they have to follow this method. This is based on IFRS US GAAP. So we should not follow the fixed percentages. You have to follow life of the asset method, useful life method. Now I'm telling you how we calculate now in India. I'll tell you. Your asset purchase cost is 1 lakh, same way. They're given in the Companies Act, Schedule 2. They're given like this: 5% scrap value or residual value. You'd keep 5% scrap value or residual value. 5% scrap value, residual value, what will be the amount? 5% on 1 lakh is 5,000. What is asset value? Asset value is 95,000. Now in the Companies Act Schedule 2, they have given the useful life. Suppose useful life they have given for an asset 20 years. They have given the life of the asset for buildings, life of the asset for non-factory buildings, life of the asset for furniture fixtures, life of the asset for computers. They have given all the things, all the useful life they have given in the new Companies Act. So useful life is say 20 years. So the depreciation per year is 95,000 divided by 20, 4,750 per year. This is depreciation per year. This is similar to straight line method, but you have to follow life of the asset, useful life. Earlier we have the percentage method. Now you have to go follow for useful life method. So now every year 4750. So it calculates depreciation only up to 20 years. Up to 20 years, what is the depreciation amount? 95,000. 4,750 into 20 years, 95,000. Now suppose you are in 21st year. Depreciation will not be calculated because you calculate the depreciation up to 95,000. So here the scrap value or residual value 5,000 will be there as it is. So 21st year depreciation will be 0, but net book value will be 5,000. 5,000 means this value, residual value or scrap value. 22nd year also same way, depreciation will be 0. Depreciation will be 0 and net book value 5,000. Till you sell the asset, you should not calculate depreciation for the asset. Suppose you are selling in the 23rd year, 1,000 rupees you are selling. Then the sale price is 1,000. This is a sale price. This is a sale price, 1,000 sale price. Now here your book value is 5,000. Your sales price is 1,000. There is a loss on asset sale is 4,000. So you book the loss on asset sale 4,000 in the books. And the net book value will not be there in the books because you sold the asset, everything will go from the books. So like this you have to follow. Now we as per useful life method as per new Companies Act in India. So you have to see each country what are the requirement. SAP is given all country requirements, all the countries chart of accounts, chart of depreciation. So this is the useful life method. Now companies have to follow useful life method now. Even companies earlier they were following straight line and WDV. They have to change to useful life method. They have given the time from 2014 onwards. They have to calculate as per useful life method. So now you have to follow useful life method, not straight line method, not WDV method. Then we have posting keys. Posting key 70, debit asset. Posting key 75, credit asset. Now earlier you've seen GL account debit posting key 40, GL account credit posting key 50. The same way we have posting keys, posting key 70, debit asset, posting key 75, credit asset. Then they have given transaction types. What we call T type, transaction type. This is given by SAP. What is this transaction type? It's like this. Transaction type 100. External asset acquisition. External asset acquisition means you acquire the asset from outside, that is purchased from outside. 110 in-house production. Produce fixed asset in-house. Sometimes what do? You produce in-house the fixed asset. 210 retirement with revenue, that is sale with consideration. You're selling for a consideration. 250 retirement without revenue, that is scrapping of asset. You're scrapping an asset, there is no revenue for you, that is called we use 250. 320 transfer within company code. If you transfer the asset within company code from one unit to another unit, that is sending unit books 320, receiving unit books 330. Why these transaction types are required? Because compulsorily you use transaction type in asset accounting. Why these transaction types are required? There is a debit to asset. You are debited to an asset. It can be due to outside purchase. It can be due to in-house production. It can be due to inter-unit transfer or intercompany purchase. Because you debit because of any reason. By seeing the transaction type, you can find out how the asset debit has come. Is 100 is there, you purchase from outside. 110 is there, in-house production. 330 is there, you received from other unit. Like that, we can easily find out. Then we use the term called like depreciation keys. Depreciation keys like this, nothing but rate plus method, like 5% straight line method, 5% written down value method, useful life method. These are called depreciation keys. Then I'll tell you asset accounting rules. Rule 1 is like this: sub-asset master is to be created with reference to main asset master. What is sub-asset? What is main asset? I'll tell you. Rule number 2: main asset master is to be created with reference to asset class. Rule number 3: account determination is specified in asset class. Rule number 4: for account determination, we assign the GL accounts based on the nature of transaction. Everybody says asset accounting is very complex. If you know the flow of the 4 rules, asset accounting is very simple. Very simple. Let me explain to you how these 4 rules will work. Then you can easily understand asset accounting. If you know the flow of the 4 rules, asset accounting is very simple. Now let me explain to you how this works. I have given the flow. If you know the flow, it's very simple. Asset accounting is very simple. Now it's like this. Now if you take any company, balance sheet or accounts, you have the heads like land, buildings, plant and machinery, furniture, fixtures, vehicles, capital work in progress. If you take any company, you have the heads like this. These are heads. If you see any company balance sheet, you have the heads like this. Now, this is, we call it as account determination. You can create your own also account determination. We call it as account determination. Now, the land. Why we call it account determination? I'll tell you. It can be freehold land or leasehold land. Buildings, you can divide the way you want. I want to see factory buildings separately, administrative buildings separately, because the rate of depreciation is different. Factory buildings is one rate, administrative or non-factory buildings are different. Plant and machinery, how you want to create your choice. Now, like you see here, I'm creating department wise, department A, department B, department C. This I'm creating the plant and machinery like this: department A, department B, department C. Your choice. We have number of departments. Then we have furniture fixtures. Furniture fixtures, you have furniture fixtures, office equipment. Your choice, like computer separately. Your choice, how you want to do. Vehicles, heavy vehicles, others. Capital work in progress, you can create like this: general. That means from your own funds, you have purchased the assets. In India, we call it as capital work in progress. Other countries, they call it as asset under construction, AUC. Then expansion 1, expansion 2. So we create separate classes like this. The classes creation is based on your convenience. You can create whatever way you want. Why we are creating expansion 1, expansion 2? The company is going for expansion now. They're taking a finance from either IDBI or ICICI, some bank or institution. What we do, whatever we incur, we show in the expansion. Suppose whatever reimbursement you have to get or whatever finance you have to get, what we do, we take the data, give it to IDBI, they finance the amount. Suppose I'm going one for expansion next year, that is expansion 2. I'm taking from SBI. So here SBI, I post everything here. I give the data to them. They give the money to us. So that's why for expansions, we create separate classes. Your choice. Now you've seen account determination. You've seen asset class. Asset class is in between in account determination. Then I'm going for asset master. Suppose I'm taking the example in department A, we have mission, two missions are there. Mission number 1, mission number 2. Mission number 1 is purchased on 20th April 2013. Mission number 2 is purchased on 10th August 2016. Like this, we create number of missions in the department. Now for a mission, you have added today one item. Because of the addition, any date, because of the addition, the asset life has gone up. So any item which increases the efficiency of the asset, you have to capitalize, you have to add to the asset. So motor, today I'm adding to mission number 1, any date. Today I'm adding to mission number 1. So this is because of the motor addition, the efficiency of the machine will go up. I create as a sub asset. Why I create as a sub asset? Why I'm creating as a main, not a main asset? The reason is like this. If I make motor also in the part of mission 1, it will calculate depreciation from 20th 4 instead of 10th June. Any date, in its today's date. Now, why I'm not creating a main asset? The reason is like this. I want to see the machine as a whole. So that's why I'm creating as a sub asset, machine motor, a part of machine number 1. So it's like this. Additions to specific assets will be created as a sub asset masters. Any additions to assets will be created as a sub asset masters. That's why I created a sub asset master. This is addition to mission number 1 only. Suppose today I'm adding mission number 3. Mission number 3 is an independent mission. It's not a sub asset. So here, if you see here, additions to specific missions will be created as a sub asset masters. Now, why we are calling it as account determination? Why we are calling it as account determination? This way, we are calling it as account determination. The reason is like this. Why to call the item as account determination? The item will decide which GL account to be posted automatically. This will decide which GL account to post automatically. Now let me give an example. Like this, I'm taking one item, plant and machinery. For plant and machinery, I specify in case of purchase which GL account it has to go. Suppose GL account 2 lakh plant and machinery. In case of sales, which account it has to go. In case of profit on sale, which account it has to go. In case of loss on asset sale, which account it has to go. In case of loss due to scrapping, which account it has to go. In case of depreciation, which account it has to go. In case of accumulated depreciation, which account it has to go. We specify for each item, the accounts to be posted, GL accounts to be posted automatically. That's why this is called account determination. The same way I have to define. Buildings purchase which account, building sale which account, building profit on sale which account, building loss on sale which account, building loss due to scrapping which account, building depreciation which account, building accumulated depreciation which account. You will specify accounts for each and every item. That's why these items are called account determinations. Now, what is the advantage of having like this? What is the advantage of having like this? At any point of time, I can see sub-assets separately. I can see assets, total assets separately. I can see the department total mission separately. If I give department A, it shows mission number 1, mission number 2, motor. If I give only motor, it gives only motor asset. If I give mission number 1, it shows mission number 1 separately, motor separately. If I give department A, it shows all the assets. If I give plant and machinery, it shows all the department assets, all the department machinery it shows. At any point of time, Once you post an asset or once you see an asset, you can see asset sub-asset wise, we can see mission wise, asset wise, you can see department wise, class wise, we can see account determination wise, the mission as a whole. Any point of time, you can see this one. That is the advantage by creating the classes like this. The classes creation is your convenience. Based on your convenience, we create the classes. Now, main asset will have always sub number 0. For this main asset will have always sub number 0. For this one, I'm creating asset addition, adding asset mission number 1. It takes main number 1 sub number 0. I'm adding a motor to the same mission, same asset. It takes 1-1. I'm adding one more item to the same mission. It takes 1-2. What is the reason? The reason is like this. Why the main asset will have sub number 0 is the reason is like this. The reason is like this. When we want to see mission number 1, purchase cost, acquisition value means purchase cost and accumulated depreciation. In the report, I give 1-0. If I give 1-0, it shows this item, purchase cost and accumulated depreciation. And what is the net book value? When you want to see motor purchase cost and accumulated depreciation in the report 1-1. I want to see only motor purchase cost and accumulated depreciation. Though it's a part of mission number 1, I want to see only this one. When I want to see mission number 1 with all the additions, acquisition value and accumulated depreciation in the report, we give 1. I want to see all the items of mission number 1, all the items. Purchase cost and accumulated depreciation in the report, I give 1. When I give 1, it gives all the items. Let me show you the report like this. In here, I'm going to show you for our batch. Now it's like this. I want to see RIR company code, only mission number 1. Only mission number 1 cost, I give sub number 0. Mission number 1, sub number 0. It shows this asset value, purchase cost and accumulated depreciation. I want to see only motor value. What I do? I give 1. It shows in motor value. I want to see all asset as a whole. Mission number 1 with all the additions. In the report, I give 1. Shows asset as a whole. So that is the advantage of this. Any point of time, you can see sub asset separately, main asset separately, asset as a whole separately. That's why always main asset will have sub number 0. Because you want to sell the asset, you can sell this asset separately, this separately, this separately, or asset as a whole separately. Your choice. Now let me tell you the flow, how the 4 rules will work. Let me tell you the flow. How these 4 rules will work. Now I'm purchasing motor. Let me reduce the font size. I'm purchasing a motor. Now, when I purchase a motor, the entire pass is like this. Motor account debit, credit, cash or bank. Any vendor or bank or whatever. When I give motor, I'm giving 1-1. When I give 1-1, system takes this as a sub asset. When I give 1-0, it takes as a main asset. So at the time of posting, when you give motor account debit 1-1, I have given like this. Let me give this, mark this one, 1-1. So 5,000, which is a subledger. Credit to bank, general ledger. When I give 1-1, system checks the rules. We have discussed the rules like this. First rule is what? Sub asset master is to be created with reference to main asset master. Immediately checks 1-1 created with reference to which main asset master. This is created what are your given debit. This is created with reference to which asset master. Main asset master. This is created with reference to main asset master. This is a rule number 1. Checks automatically without taking any time. The rule number 1. When I give 1-1, it checks this is created with reference to which main asset master. This is rule number 1. Rule number 2. Immediately checks. The rule number 2, if you see the rule number 2, main asset master is to be created with reference to asset class. Immediately it checks. Question number 1 is created with reference to which asset class. Which asset class you have created? You have created under department A, department A. This is rule number 2. Rule number 2. Number 2. Main asset master, machine number 1 is created with reference to asset class department A. This is rule number 2. System checks immediately rule number 3. What is the rule number 3? Account determination is specified in asset class. In asset class, what the account determination you have specified? If you see the example, account determination specified in the department A is plant and machinery. Plant and machinery. The rule number 3. Now system checks. For account determination, we assess GL accounts based on the nature of transaction. System checks what is the nature of transaction. Nature of transaction is purchase. So system immediately checks for this one. In case of purchase, in case of plant and machinery, purchase, what account you have assigned? What account you have assigned? You have assigned. In case of purchase, we have assigned account like this. GL account 2 lakh, plant and machinery account. In case of purchase, automatic goes to GL account 2 lakh, plant and machinery. GL account 2 lakh, plant and machinery. 2 lakh, plant and machinery. Automatic goes to this account. This goes to this account. So now if you see the entry, there is a debit to general ledger, credit to general ledger, your trial balance will match. Like this, the system will update without taking any time. It updates automatically. You've seen earlier, in case of vendors, what you have done? You have posted to vendor. So when you post to vendor, vendor is updated, sundry creditors raw material is updated. Earlier you posted to customer. Customer is updated, sundry debtors is updated, general ledger automatically. There the link is only one link. When you give vendor or customer, it takes the sundry creditors or sundry debtors. But here the links are many. When you post to sub asset, it checks what is the main asset, it checks what is the asset class, it checks what is the account determination, it checks in case of purchase, what account it has to update. It has to update this account. So there is a debit to general ledger, credit to general ledger. Your trial balance will match. You want to see asset wise, we see the report model. You want to see GL account, plant and machinery, we see this one. All the machinery will be shown here. This way asset accounting works. If you know the flow of the 4 rules, asset accounting is very simple. Here I'll show you practical how it works. Now we are only in theory part. Today I'll send it to you this notes so that tomorrow will continue. So please go through this one. Tomorrow I'll give once again one more example. Suppose if I purchase main asset directly instead of sub asset, main asset directly, how it takes main asset purchase. Sometimes what happens, car is there. Car is a main asset. We will not add anything. Okay, when you purchase a car. Afterwards, when you do any repair anything, it will go to repair account, not a sub asset. So you can create as a sub asset or you can create as a repair, your choice. So in case of main asset purchase, how we have to do this continuation, we will take up in tomorrow session. Today I'll send it to you the notes and I'll send you accounts payable, accounts receivable, entry questions also that I'll send you either tomorrow or day after tomorrow. I'll send it to you. Okay. This continuation will take up in tomorrow session. Thank you very much.